Hey guys, welcome to the Tradium, the Trade Mate. Here today we're going to discuss about the financial system in which the banking system comes. In banking institution, there is a central bank and that have three parts. That three banks. The first is scheduled bank, second is non-scheduled bank, and the third is development banks. So scheduled banks are described as, according to the RBI Act, those banks that are listed or incorporated into that second list of that RBI Act are came under the scheduled bank. The non-scheduled banks are just opposite of the scheduled banks. Those banks who are not incorporated in the second list or the second schedule of the RBI Act are called as non-corporate and non-scheduled banks. The third is development banks. Development banks are those banks that are specifically targeted for the development of rural areas. Example is NABARD. So let's discuss about some few points about these banks. The minimum capital that a scheduled bank is allowed is that 5 lakh rupees. The second point is that these banks get benefited by raising their amount to the RBI through repo operations. Here the negative point is they have to deposit the CRR and SLR rate to the RBI bank. Here CRR is cash reserve ratio and SLR is statutory liquid ratio. The bank has to deposit a CRR to RBI in the form of cash. This was the discussion about the central bank, the scheduled bank, the non-scheduled bank, and the development bank. Here the scheduled bank is described or divided into commercial bank, corporative banks, and special financial institutions. Commercial banks are divided into public and private sector, foreign banks, and regional rural banks. There are 11 plus 2 public banks, 11 plus 1. The 1 is SBI and the 11 are, so totally there are 12 public banks. There are private banks. How many private banks are there? There are 21 private banks as on present data. Foreign banks, come to foreign banks, there are 44 foreign banks at present, and coming to the regional rural banks, there are 43 regional rural banks at present. And what are commercial banks? Commercial banks are mainly profit oriented banks. They focus their attention on generating the profit as a whole scenario. Customers are not concluded as a member. Coming to the cooperative banks, the cooperative banks are service oriented banks. They focus their span of attention on providing the service to the customer, not focusing their attention on the profit oriented or money oriented. The election and the board of members or the board of directors are elected by the members. So the decisions in the cooperative banks are concluded as democratic decisions. So this was about cooperative banks. The third is differentiated banks. Differentiated banks are basically different from the cooperative or commercial banks. There are three types of differentiated banks. The first is small finance banks. There are 12 small finance banks at present. The second is payment banks. There are 6 payment banks at present. And the third is local area banks that are particularly dedicated for the local areas, for the rural areas, for their development. There are at present many local area banks. The local area banks are dedicated for more than one district. We will discuss later on videos. So first, have a general brief idea about small finance bank. Total loan portfolio का 50% in that amount up to 25 lakhs. What the small financial banks or SFBs actually works. Their working portfolio is approximately like this. If they have to give loan of 100 CR, so their portfolio's 50% loans are given up to 25 lakhs. Let me explain this. If the total loan portfolio is 100 CR, so they will take a part of 50 CR, that is 50% of that loan, to a separate community, that they will give the loan to that community, and the loan amount will be up to 25 lakh. The 50% of that 100 CR, that is 50 CR, and the amount that loan includes to one individual, that will be 25 lakh, up to 25 lakh, not more than 25 lakh, so that they can reach to the more customers. The second is payment banks. They are not as term deposit, they are demand deposit. Okay, RD FDs are not included in the payment banks like Paytm or GPay, etc. There is no options for their RD, recurring deposit, or fixed deposit. They are term deposit. They are not term deposit. They are demand deposit. This means that you have to deposit or take money or take that amount anytime you want. They are not fixed deposit. They are not fixed deposit as included in term deposit. So there is a rule: total demand deposit 75% is kept as SLR and 25% will go as deposit in other banks. There is a rule in this: the 75% of the total bank's total deposit will be considered as SLR, that is statutory liquid ratio, that will be kept within that bank, and the rest 25% will be goes to other banks to generate or to take the interest rate on that 25% from the other banks. So this was the total brief about the central banks